Hi folks, let's see if we can do this in 3 minutes. Natural gas has broken through the top of the flat top of the ascending triangle. This is the day chart on the Henry Hub price at Black Bull. You can see we've now reached up to about 3.67, a little bit higher than that on the spike up. We'll have a look at the 4-hour chart shortly. There's the flat top breakout on the day chart, and we're moving up towards that level there. Let's go to the 4-hour chart. I'm going to show you the COT report as well, see how people are positioned. A little bit of a pullback on this current 4-hour. We haven't reached the order blocks yet. I expect we should get up there. Targets are $3.75 and $4, straight up into those order blocks. We could get a little higher, actually, up to the top underside of this trend line, which could take us up to $4.20. So we'll see how we go. Just a little bit of a pullback on the 4-hour. If this forms an engulfing candle and drops much further down, particularly below the 200 period moving average there, we'll be a little bit worried about this. Let's look at the COT report, focusing on managed money, non-commercial swap dealers, and other reportables. That would be the retail traders. Managed money is weighted to the long side, 183 versus 135 to the short side, but taking some off the long side. That would be profit taking as we rise up into these levels. Non-commercials slightly weighted to the short side actually, but pretty much balanced if anything. The swap dealers weighted to the long side and adding more to the short side and actually switching directions somewhat. They weighted to the long side because they believe the market's going to go down, but they're actually taking some off the long side, adding to the short side as the market starts to squeeze higher and squeezes out even some of the swap dealers from their long positions. Other reportables, these are the retail traders, 31,000 long, 152,000 short, a big chunk to the short side, but reducing positions on both sides, taking more off the long side than the short side, so weighting even more to the short side. The retail traders are fairly predictable and fairly accurate in their price assessment, just go the opposite direction. So mostly short as this market is moving higher and due for a short squeeze, as they call it. Perhaps the same for the managed money and the non-commercials. So if we do push up a little higher than where we are currently, expect a bit more impetus to the upside, because some of those positions will be squeezed out, particularly if we break up higher into these order blocks above us and towards the underside of that trend line. Let's go back to the day chart and have another wee look. So the targets into those order blocks on the 4-hour chart are shown on these green arrows on the day chart, and bear in mind that we could reach even higher up to the top of the underside of the trend line, or even a double top right back up here at 4.35. Later on today, we got jobless claims and PPI. Both of those will affect the dollar significantly. Anything that affects the dollar will affect the price of all commodities, including natural gas. And we've also got the EIA natural gas stocks change report, expected to be negative 90 billion compared to negative 174 billion on the last occasion. So whatever this number comes out to be will be interesting, and whether it meets expectations or not will play on the market price as well. Hope you enjoyed that. Have a great trading day. Please like and subscribe. See you in the next video.
Bulls against the bears, whispers of a cold front send us in the scares. Margins tight, margin calls, nerves they fray, wondering if I'll see green by the end of the day. I'm a natural gas gambler, riding that fiery storm, excitement and fear, that's just how I was born. Greed's got me in its claws, profit's just a taste.